We traded FOMC and absolutely crushed it. You can see 330% trade, 200% trade, 170, multiple bangers. So in today's video, I'm going to give a bit of detail of why I entered those trades. We're going to talk about what the next steps are for the S&P 500, the NASDAQ 100, the Russell 2000, the VIX, the dollar, the bonds. And then, of course, we're going to wrap it all together and look at what the next steps are because we just had the FOMC meeting. All right. So without further ado, I hope you guys enjoyed the content. And yeah, let's get started with the video. So number one, if you guys are interested in being a part of a community with like-minded individuals where everyone is trying to learn and grow, where people have great hearts, where everyone just wants each other to do well and help each other, definitely join the Discord. Everyone in there is really, really good. Join the Discord in the channel description below. And yeah, send me a DM, follow the steps. And yeah, I would definitely join the Discord. It's very, very beneficial. All right, so this is a chart of the S&P 500 on a 1 minute. Okay, write that over here for everybody to see. All right, so essentially, we took no trades between 2 o'clock to really until basically 3 o'clock. All right, so the thing is that we had a huge move to the downside as soon as we got news that there would be no rate hike. It was in line with expectations. We saw every single day, we saw that there was going to be no rate hike, according to the CME group, Fed tool. So in yesterday's video, we were seeing that there was a 97% chance that there was going to be a rate pause, right? But now the June meeting is not showing up. It's only showing the July meeting. So for the July meeting, there's only a 35.5% chance of rate pause and a 64.5% chance of a rate hike. So once more, basically we saw that the FOMC, the Fed's fund rate remained the same. And that essentially caused the market to drop very, very dramatically. So it was already in line with expectations. We were looking at it for the past few days. We knew that this was going to end up happening. And what ended up happening was the market completely collapsed, right? So we didn't take any trades. So now what ended up happening, and it's important that I'm giving you guys the context of everything because that really determines your day trading, which direction you're going to take the trades and your buys, okay? So now essentially look at what basically ended up happening. So this was a V-shaped recovery, right? A V-shaped recovery, and then we started to consolidate once more. So now this is extremely overextended to the downside, and I'm going to explain to you why. So first and foremost, when I was looking at was, first of all, we went short. We went short at 1504 with 304 with a 437.10 stop, but I didn't short. I didn't sell. I continued holding, and what ended up happening was I think we ended up. Yeah, so we entered over here. And the contracts were down. I think that's what ended up happening, right? Yeah. So the contracts were down, and then we ended up sorry. So we took the short here. Yeah, sorry. We took the short right here at 306. My bad. Had a crazy day. So we took the short here at 306. With a stop loss here, and basically that didn't work out, but we didn't sell. And the reason why we didn't sell is because this overextension. So if you're looking at this, right, we took a fib level from the recent lows to where we started to consolidate. Okay, and we saw that the 23.6% fib was holding as support, which is generally very, very strong. But usually we should get a retest to at least the 38.2% fib, but we never did. So in my opinion, it was already very, very overextended to the upside. The NASDAQ also, I was looking at the NASDAQ chart. The NASDAQ was also at a very important level of resistance. The IWM was already showing weakness. And of course, the SPY has this 437.68 level as a level of resistance as well. So my bias was bearish. Okay. And I knew that if we got another move to the upside, because we entered at a very, very technically important and intelligent way to short, in my opinion. This was a prior level of resistance. 437.50 was a really, really good level of resistance, and basically, what a day. Sorry. Yeah. So, basically, this was a really, really good level of resistance. Okay. And once we broke to the upside, things already began to become very, very overextended to the upside. And I knew that one more leg up was going to be a complete decimation to bulls. So once this candle happened, right? Once we broke above, we're already very, very overextended to the upside. We had a huge move to the upside and we consolidated above the 23.6% fib after a complete V-shaped recovery. So what do you like? How do you think that this is just going to continue skyrocketing up without falling dramatically, right? That's essentially what my thought process was. Because when you look at the rest of the day as well, you could see that there was so much short covering that ended up happening throughout the entire day. We basically fell dramatically throughout the day, and it was very, very bearish, and then we fell dramatically after the minutes came out. But we came back and regained all those gains. So everyone that was short, they covered, and that short covering bounced the market. So now that we're bouncing, I was shorting, and it was not a sustainable move to the upside. And I just knew that we would have a good opportunity to catch a short. Okay. And by the way, if you guys are enjoying this content, make sure to like and subscribe to the channel, like the video, and comment, do all that good stuff. And if I can do something better, I know that I definitely can. Just a bit, I just had a really, really big day, and crazy everything. So yeah, I apologize, but I apologize in advance. Anyway, so we shorted. We ended up going down about 15-20% on the contracts pretty quickly, right? And then it got down to almost 30%, and we ended up adding more puts. We ended up adding more puts, and I essentially just had a stop loss for 438.20, I believe, right? And this next leg up, it was just too much overextension to the upside. It was really just an opportunity to make people that were late bulls to start to try to become very, very bullish here. And it was a bull trap, and I knew it was a bull trap. We added some more shorts, and this completely just vomited to the downside. And by the point of when we sold, the contracts were up at least 300%. The initial buy that we had was also up over 200%. So this was a phenomenal trade, right? And then we ended up shorting this again, and this was over 100%. And then we shorted this again, and then this was over 70%. So we just had a bearish bias. I knew that we would easily just continue to fail at these levels of resistance, and it worked out really, really well. I could have done a better job explaining, but it is what it is. It was, yeah, we just had that bearish bias. The NASDAQ was at levels of resistance. The SPY, the IWM were all at levels of resistance, and we were very overextended to the upside already. So just, yeah, that's that. I hope you guys enjoyed that. And now let's take a look at what the next steps are for the market. Let's take a look at the dollar, the VIX, and the bonds. All right, first let's take a look at the VIX. So the VIX, we know, has an inverted relationship to the market. If the VIX is falling, that generally means that the market is doing well. Okay, so currently we can see that the VIX is definitely looking very bearish. There's a lot of room to the downside in terms of touching the lower level of the Bollinger Band, and we had a cross upwards on the MACD. So I thought today would be neutral and bullish for the VIX, and that was not the case. We ended up falling below levels of support. We filled this gap, and now it looks, this is a clearly bearish sign on the VIX. Okay, so if things are clearly bearish on the VIX, generally as unless this level of support holds. But this is a bearish setup. But you don't really want to go short here on the VIX. So it's going to be interesting to see if they just continue dropping it lower. But right now, we are above support at 1350, and we just need to see if essentially we end up falling lower. But this is not a good sign that the MACD is crossing above, yet the VIX is falling lower in price. That's not what we really want to see for bulls on the VIX here. All right, so there's that for the VIX. Let's take a look at the dollar. All right, so now the dollar is a bit interesting here. So we see that the dollar was starting to really creep outside of the lower level of the Bollinger Band. It looked like we were about to get a close outside the lower level of the Bollinger Band, but we got a bounce backwards up. So the dollar has an inverse relationship to the market as well. If the dollar is falling, then generally that means that the market is doing well. And currently, there is still some more room to the downside on the dollar. So once again, we can easily continue. We could get another move to the downside on the dollar, no problem. And if that happens, then that would be bullish for the market, in my opinion. So the dollar and the VIX are not looking that great, to be honest. But the dollar is starting to get a bit overextended to the downside, okay? So next, when we take a look at the bonds, we can see that the bonds, first of all, they have a correlated relationship to the market. If the bonds are doing well, then that means that the stock market should also be doing well. We're technically making higher lows. Things are holding support. We need to see a strong move to the upside. So yesterday I was saying that this is not a good sign for the bonds that we were wicking up like this. And today we obviously fell much lower. So this could be the start of a bear trap for the bonds here, where they painted a very bearish picture on the bonds and then they ripped it up. So this is something that could also end up happening on the VIX, but we'll see what happens. So the bonds, we need a solid close back above 128, at least in my opinion, on the bonds. So if that happens, that'd be great. But yeah, currently we're not seeing extreme weakness. So this movement in the bonds is not really going to affect the stock market, in my opinion, until we get closes above levels of resistance or support. Okay. So last but not least, let's just go ahead and take a look at the overall market. Let's take a look at the Russell 2000, the NASDAQ, and then the SPY. We'll put it all together. All right. So currently, right, the market, we just got news that the Fed is going to continue stay on track, try to lower interest rates. The same thing, basically, right? They paused rates right now. They're expecting to increase interest rates in the later months. And they're obviously targeting lower and lower percentages for the years to come. Okay. So the best we can do now is trade the levels. This is a spectacular point to have gone short on the IWM with a stop loss right above here. So now, right, since this is a beautiful opportunity to have gone short, in my opinion, on a 1 minute time frame for looking at the setup, great opportunity to go short. So we're gonna have to see if they can continue falling, making it fall lower. If this ends up breaking above and we consolidate at 192.60, 192, 193, right, then that's another opportunity to short. But now if you're bullish, the levels that you basically want to hold is right here. We're right at 184.80 and this 23.6% fib here at 184.13. So the 23.6% fib has been acting as support, but if you got closer to this level of resistance here around 188, 189, then it's a way better short, in my opinion. Especially the way that we closed like this, you're way more comfortable being short, in my opinion, on the IWM. All right. And when you take a look at the NASDAQ, this is obviously making new highs and it's continuously stair climbing and everything like that. This is showing a lot of strength. But my point is that when things are this overextended to the upside, right, and the IWM is showing weakness, right, the SPY failed to continue above this level of resistance. So I was showing how holding puts for 2 to 3 months out on the SPY with basically you're having a stop loss right here, and this is a tight trade. We're basically at a level of resistance the SPY is not showing strength, but the NASDAQ is, and the IWM is showing weakness. But once again, we're at support on the IWM. So this is a good trade to the downside, in my opinion. We could, if the NASDAQ continues flying upwards, which it easily could, very, very easily could continue flying upwards. You know, we're going to see at least 440 to 443 on the SPY. But you have to think about it in terms of what they want retail to feel, right? They want retail to be very, very bullish. By the point retail is very, very bullish, that would be the perfect opportunity for them to add, for them to unload their longs and for them to go short. So by the time we break above 440, maybe 445 area, that's when everybody, all the bulls are really going to start talking. Like, I think that's when a lot of people are going to be like blindingly bullish again. And then, I mean, yeah, like at the same time, right? In terms of this whole move upwards, right? In terms of swinging, it's safer to get something 2-3 months out. I have been killing it in terms of day trading, but in terms of the day-to-day swinging, I haven't really even bothered doing that as much right now. In terms of like the week, 2 week out calls or puts and stuff like that, I haven't really been doing that as much because during the day we've been killing it in terms of day trading. So now, right, since we're at a level of resistance, it's easier to go long on puts. It's easier to buy into puts 2 to 3 months out, and with a nice tight 15% stop loss on the position. If it ends up breaking below 15% on the position, then sure. My point is, the NASDAQ is very overextended to the upside. The IWM is showing weakness, and the SPY is at a level of resistance. So I'm not expecting the NASDAQ to continue skyrocketing up. If it does, great, but I'm not expecting this to just continue up like this. And the other thing I want to show you guys is the chart of the S&P on a weekly chart. So now this is starting to really, it looks like it's about to close. Well, currently it looks like it's about to close outside of the upper level of the Bollinger Band. Now in history, when we look at whenever the SPY is closing outside of the upper level of the Bollinger Band, usually within 2 months, we get a proper pullback. So this is extreme overextension on a larger term time frame. And that's why these 2 to 3 month outputs should do well. And 3 month out would be the safest. And yeah, that's basically my thesis for a longer term put. In the short term, we could easily continue rising up, etc., etc. But this is my thought process for the market, right? Immediately, tomorrow is going to be very, very turbulent. And depending on how we open, we're just going to trade the levels. It should be good. But just be very careful about FOMOing in. All right. So be very careful. Make sure you stick to your risk management. Make sure you don't over allocate yourself to any position, and do not marry any position either. If you are very, very down on a position, then you have to cut your losses. You need to have your risk parameters set. And yeah, man, I hope you guys enjoyed today's video. Please make sure to like, comment, subscribe, do all that good stuff. And I will see you guys bright and early tomorrow morning. Honestly, let's see, honestly. But yeah, make sure you guys are subscribed to the YouTube channel. We are going to be live streaming here. All right. So without further, yeah. All right. Have a good one. Thank you.